How did one XRP trade turn into a $302,000 profit in just 14 days? In this video, we are diving into a fascinating real-world trading story that has captured the attention of the crypto market. A top crypto trader revealed how he managed to turn a single XRP trade into a massive $302,000 profit in just 2 weeks. This wasn't luck, hype, or blind optimism. It was a carefully planned strategy built around market alignment, timing, and discipline. What makes this story especially important is that it offers a clear lesson about how Bitcoin and altcoins move together and why most traders lose money by entering too late. By breaking down this trade step by step, we can better understand how market structure, momentum, and capital preservation play a crucial role in long-term success. So, who is Cameron Faust and why does his strategy matter to the market? Cameron Faust is not a newcomer to trading. With nearly 2 decades of experience, he has seen multiple market cycles across forex, stocks, and cryptocurrencies. His longevity alone adds weight to his insights, especially in an industry where most traders fail within a few years. From a market perspective, traders like Faust matter because they don't chase trends. They anticipate them. His strategies are based on recognizing structural patterns that repeat over time. When experienced traders publicly share their setups, it often reinforces confidence among market participants and highlights conditions that can lead to high probability trades. This also impacts sentiment. When seasoned traders show discipline and transparency, it reminds the market that strategy beats speculation, especially during volatile periods. So, what is the alignment strategy and why is it so powerful? At the core of this trade was what Faust calls an alignment strategy. This concept revolves around identifying moments when Bitcoin and major altcoin like XRP are both approaching potential breakouts at the same time. This matters because Bitcoin often acts as the market leader. When Bitcoin moves first and altcoin lags, many traders jump in too late. But when both assets are positioned for a breakout simultaneously, it creates a rare window where momentum can expand rapidly across the market. From a market impact standpoint, alignment reduces risk. Instead of relying on Bitcoin to drag altcoins upward after the fact, this strategy places trades before the crowd reacts, capturing the most explosive part of the move. So, why did Bitcoin's force pattern signal a major opportunity? Faust explained that Bitcoin has entered what he describes as a force pattern. This is a late-stage bullish structure where price compresses before releasing strong momentum to the upside. When Bitcoin enters this phase, it often triggers market-wide confidence. Traders begin reallocating capital, liquidity increases, and risk appetite expands. Historically, this phase tends to precede powerful continuation moves, especially when broader sentiment supports it. The market impact here is significant. Bitcoin breaking out doesn't just move Bitcoin, it reshapes the entire crypto landscape, creating opportunities for altcoins that are positioned correctly. So, why was XRP still in a survival phase? And why did that matter? While Bitcoin was preparing to explode upward, XRP was still consolidating, sitting below a key resistance level. Faust described this as a survival phase, where an asset pauses after an earlier rally. This phase is critical. Assets that consolidate instead of collapsing show strength, not weakness. XRP holding its ground suggested that sellers were exhausted and buyers were quietly accumulating. From a market standpoint, this is often where smart money positions itself. When resistance finally breaks, price can move quickly because supply has already been absorbed. So, how did the entry and exit strategy protect capital while maximizing gains? Rather than entering all at once, Faust scaled into XRP around the mid $2.60 range. This approach reduces risk and allows flexibility if conditions change. As XRP followed Bitcoin's breakout, price surged toward the mid $3 range. Instead of chasing higher prices, Faust exited when momentum began to weaken. This decision reflects one of the most important principles in trading. Protecting capital matters more than squeezing every lost dollar. Market-wise, disciplined exits help stabilize portfolios and prevent emotional decision making, which is often the cause of catastrophic losses. So, why do most altcoin traders lose money after Bitcoin moves? Faust emphasized that most losses happen when traders buy altcoins after Bitcoin has already completed its move. By that point, momentum is fading and liquidity begins to dry up. When altcoins fail to keep up, sharp pullbacks follow. This creates frustration, panic selling, and long-term distrust in the market. The XRP trade worked precisely because this mistake was avoided. The timing was proactive, not reactive, which dramatically increased the probability of success. So, has Cameron Faust profited from XRP before, and what does that say about the asset? This isn't actually Faust's first success with XRP. Back in 2019, he re-entered the market after buying XRP at a price of 0.20 or 20 cents. As it climbed to $1, his initial $20,000 investment grew to $100,000. Through continued trading, his portfolio expanded to $1.7 million in just 420 days. XRP was the first altcoin that delivered defining gains for him, marking a major turning point in his financial journey. From a broader perspective, repeated success stories reinforce XRP's role as a high liquidity, high interest asset, especially during synchronized market moves. In my own personal opinion, this story highlights a truth many traders ignore, and that's timing beats prediction. Cameron Faust didn't guess the market. He waited for alignment, respected structure, and exited with discipline. This trade wasn't about hype or holding forever. It was about understanding when conditions were right and acting decisively. As XRP continues to draw attention, stories like these remind us that success in crypto is less about the asset itself and more about strategy, patience, and risk management. And this finally ends our video. Thank you very much for watching and see ya on the next one.